joining us right now is a stock market strategist who has seen certainly his share of economic, financial, and political crises. Barton Biggs is the managing partner and co-founder of Traxis Partners, a hedge fund with over $1 billion in assets. He's the former director of global research at Morgan Stanley, which he joined in 1973. Just last week, Barton said the market panic over the earthquake and tsunami in Japan was overdone and that he was buying Japanese shares. He joins us now from his office right here in New York. Barton, good to have you back with Matt and me. Good afternoon.
Thank you, Carol.
You have seen your share of crises, whether they're economic, financial, and so on. It feels like, Barton, over the last couple of months, there has been so much news, whether it's Japan, whether it's Europe, whether it's the Middle East, and we still have worries here at the U.S. Give us some perspective of how bad kind of the situation is right now globally, or is it really not that bad at all?
Well, I mean, we certainly have had a number of, black swan crises back to back, and that's always very disconcerting. But how do I feel now? I sort of feel that we've got through a couple of them, and there's still a couple of black swans flapping around out there. But unless you come up with a dire scenario, I think we're going to extend the rally into back through the highs of a month ago, and hopefully further than that.
Hey, Barton, we have the headline running across the bottom of the screen. Barton Biggs has been buying Japanese stocks. Obviously a bold call that a lot of people admired there. What about U.S. stocks? I mean, we took our hits here on the S&P as well during the Japanese crisis, during the Middle East, what was going on and continues to go on there. Do you like U.S. stocks here?
Yeah, definitely. I mean, like I bought. I don't make a big deal out of Japan. I bought a 10% position in Japan, which is hardly a great dramatic move. But yeah, I definitely like the U.S. and I've been there all the way through. And frankly, I cut back a little bit during that pullback. But I'm pretty well loaded up now.
Barton, we keep kind of talking about that there's, look at a bunch of the economic news that's coming out globally, whether it's Europe, whether it's the U.S., that it's getting stronger and stronger. Is that enough to kind of outweigh whatever black swans may come down the road in the next few months? And I think Europe specifically, it feels like we certainly haven't dealt with that crisis all the way. Japan, we'll have to see how that continues to play out. And the Middle East is also a big question. But is the economic news that we're seeing globally strong enough to kind of outweigh what may come down the road here?
Look, you can't live your life investing on the probability of black swans. And so, yes, I think the economic news is very encouraging, and we're moving from just from a snapback and a recovery into a self-sustaining recovery. And the data's been a little soft the last couple of weeks, but still, I think that the economic news is good enough both in the U.S., Europe, Asia, and maybe even in Japan to move markets another 10 or 15% from here. But if something awful happens in Bahrain and in Saudi Arabia, all bets are off. And if the Europeans continue to muck up this whole sovereign debt situation, that could be a very disconcerting factor. And look, I mean, there's always things to worry about, but I'm worried about U.S. house prices. And again, the data that came out today shows that U.S. house prices on existing homes are still declining, have in fact declined to a new low, and that home sales, in other words, of these existing homes, have weakened very significantly in the last month and a half or so. And that's bad. I mean, there's no question about it.
Does that mean, Barton, that you like, I know you were a fan of dividend-paying big-cap stocks here in the U.S., but also a fan of emerging markets when you were talking to our Mark Crumpton a couple weeks ago. Where are you most excited to put your money right now?
Well, I'm most excited to put it in. I would say, I think China and a couple of the other Asian emerging markets, Indonesia, probably India, are very, very appealing. I think that in the U.S., tech stocks, particularly the big capitalization growth tech stocks, and I differentiate between the big capitalization mature tech companies and the new generation of growth tech stocks are very attractive. And I think that in all probability, I still like the oil service stocks, for example, and I like that's what you said. The big capitalization blue chip stocks, ranging from such dull names as Triple M to Procter and Gamble and Coca-Cola, stuff like that. So I can find plenty of good stocks to buy.
What do you think when you look forward to the U.S. rate situation, Barton? Because lately there have been some people, Jeremy Siegel among them, who have said the Fed maybe needs to get ahead of the curve and think about raising rates sooner than the market would expect.
I don't think it's going to happen, Matt. I think that Bernanke is obsessed with house prices because he knows how important house prices are for the net worth of the average American, and they're crucial. And the fact that house prices are still declining has got to be telling him that QE2 is still not doing what he hoped it was going to do. And so I think if house prices keep falling, I think there's a fairly good probability that he's not going to end QE2, and there may be a QE3.
Maybe a QE3. All right, Barton, on that, we're going to have to leave it. Thank you so much for joining us. Barton Biggs there of Traxis Partners.